Good day, ladies and gentlemen. Many have been asking me a series of questions. Sir, I'm a new person. I don't know how to trade. I don't know. I got register on your signal and all of that. The truth of the matter is that you need to go and learn how to trade. That's very fact. All right. Now, if you have not registered on our platform, Capital Extents, register now, okay, and have access to our free signal. It's very, very important. Synthetics and BEKENET softwares. Now, I put this thing together on our group, what you need to do. We have different style, for beginner especially, price action, liquidity concept, all right, maybe one or two indicator, MACD and moving average, or RSI and moving average. But in everything you do, price action must be included. And that's why you need to learn about the anatomy of candlestick. So let's quickly go. So take a snapshot of these things and let's look at what do we need to do, say what to check before, during, and after market entry. What am I supposed to do? All right. So then, of course, you are going to do analysis, and that's where you take an entry. So I'm going to take you to trading view. So don't mix anything together. All right, so don't miss anything. Let's go quickly the way you are going to go. So as I take a snapshot of all of this details, so quickly I'm going to take you on a trading view, what to do, what to check. So first, you need to understand that there are three major points of entry market. One, at a reversal point. Two, at a pullback and continuation. Three, at a breakout or retest. Now, sometimes reversal point can be in two dimensions. First, reversal point can be at the end of a trend. Market is changing a trend. That's a reversal. Two, okay, so two things I've said. One, at the reversal point can be at the end of a trend, all right, when the market is changing total direction. Number two, it can be at the top and the bottom of a range. So you should understand that. So reversal point can be at the end of a range, top and the top of a range. Then it can be at the end of a trend. But all of this is the type of market, because we say market move in three dimensions. Okay, there are complex market movements, so you should understand. But don't go do that. As a beginner, I will always advise you that in forex, crypto, synthetics, don't trade the market that is not trending. So that's to save yourself from so many troubles. They're very important. But now, so quickly, let's go to look at what are we going to look at. Probably so reversal point is a place where you buy or sell. Okay, then pullback and continuation, meaning that the market is actually trending and it has not stopped. So would you say because the market has not reversed, you're not going to find an entry? No, you have to, as a matter of fact. All right, so let's quickly look at, so that we will not tell stories about this, and then we can implement what we need to implement. Okay, so follow me as I take you through in a direction now and pay attention. I don't want this training to be too lengthy. I just want you to learn basic things as much as possible. All right. So this is the market, for instance. All right. So this is your trading view. If you want to learn more about trading view and all of that, you have to go and check on my videos. I've done a lot of trading view trainings and all that. Okay. So let me take, I just want to find any pairs that probably is trending and all of that. So let's look at either it's crypto, forex, any instrument at all, and now so that we can just find. All right, so let me look at ZKC. All right, so I just want to put any instrument. Okay, this may not give us what we're looking for, so let's look at, okay, let's look at BNB. Okay, I want a plain, let's look at AUD card, something like that. Okay, so this is AUD card. So let's look at it. But first of all, so we have few things we have said when we need to trade the market, okay? When we need to trade the market. So let's quickly look at it. So to trade the market, so there's something you need to look at. First of all, as a trader, you need to identify the type of trader. I'm not here to teach that. So you want to learn about type of trading, maybe scalping, day trading, and all of that. So I'm not here to teach that, okay? I just want to show you what to do, all right, before, during, and after market entry. So what do I check to enter the market? So, but you need to understand that I'm entering the market in three dimensions at a reversal point. And we'll say reversal point could be like this. So look at it. If you say reversal point, this is a line, all right? So this is a line, right? And then let's look at it. reversal point. So when the market is going sideways, I think I saw a market like that, all right? When the market is going sideways, so what exactly am I supposed to be doing? So when the market is going sideways, that is to say the market is doing like this. Of course, you know it's not going to be straight. You understand? So that means that market is ranging, okay? So now it's still a reversal point because what? The market was going this way and I reverse from here and return back here and I reverse from here and return back here, reverse from here, return back here. That's still a reversal. Do you get it? So that's it's a reversal. Then a reversal can now be at the end of a trend. So let's look at this now. Let's just pick this and show an example. So let's take this for instance. It doesn't matter. So I'm not doing a perfect trending, okay? Okay, so let's take it this way so that you can easily understand what I'm trying to portray. All right, so let's take it that way, okay? So the markets, you are taking a trade, okay? So let's take it that way. So you just need to quickly understand. So then you are taking a trade again at the end of a point that market reverse, okay? So this market is reversing. That's why you are taking the trade, okay? Then we said reversal point at the end of a trend or at the top or at the bottom of a trend, a range. Because trend can be sideways, which is range, or it can also be uptrend or a downtrend. You get it now? So when the market is reversing, you're looking for a short, maybe market have been trending. When it's reversing from bottom, you're looking for a buy. Then it has already reversed and moving up. Will you stop until you find another reversal? The answer is no. You just want to find an entry, and that's the second aspect of entry, which is called what? A pullback and continuation. So these are things that you need to look at. So a pullback and continuation is another entry point for you. All right. Then the next, so that means the market was moving up, and then so we're going to do experiment that. So now look at it. So let's take this market for instance. Okay, so if we take it from here, this is a trend, okay? If we take it from here, this is a trend. So that means this market started from here, right? Now, I'm not going to teach you so much about trend, but this is just to understand where should I enter from. Now, this market was moving from here. Now, I actually got here and pull back. But this is the point. This is an advanced point of understanding the trend. Now, the market start from here. You move up here. You pull back here. All right? Then you move up. This is another move up. But this move down, this down, has been validated by this one. So that means the market actually moved this way now. This is the market moved from here to this point, and 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 now currently here. Now, so look at it. So very simple, okay? Now, so when you are looking, so when the market was reversing, there are things you check to know that the market actually reversed and you are looking for a buy. Now, market has already reversed. You want to see that the market actually, is it going to continue the move? Yes. So when it is going to continue the move, you wait for it to pull back. So when it pull back and get supported at a level, then you want to buy. Then when you didn't get it, when you get to that point, you want to look at a breakout and retest. So there are so many ways, okay? So breakout and retest, pull back, and continuations, and then all of that. So it then means for me to find an entry, I need to look at the all of these things. So now let's go to the second thing. So I'll just show you now. So this is a what? This is a pullback. This is a move. This is a pullback. So that means if I meet the market when it moves this way. So all of those things they are telling you, break of structure and all of that, all the simple name, this is purely price action, okay? This is purely price action. So what really happened here is this. When the market start from here, so look at this point now, this is a reversal point, okay? Because the market move up here and pull back to this point. So after pulling back to this point, there are things you will need to do. Of course, I need to know to what extent will this market get down to before finding an entry. These are different things you need to learn separately, okay? You need to learn this separately to know to what extent is it going to pull back before buying. And that's where you are waiting for to buy. And then when you buy, what should I target? Then immediately you break this high again, you expect another pullback. So after that pullback is when you are finding an entry and you want it to create a new high. Okay? So when it creates another new high, then you wait for another pullback for it to create another new high, another pullback for it to create another new high, another pullback for it to create another new high. So we are going to get all of these things, and that is the reversal point we'll talk about and continuation. Now, so let's go. Pre-market, okay, so pre-market entry. First thing, so now we have understood, okay, my entry point can be reversal, it can be pullback and continuation, it can be a breakout or a test. So if that's the case, just do like what we drill as range. When market break out of a range, you want it to retest that point, you are taking an entry. Can you see now? So you can easily say that pullback, pullback and continuation is more or less working with a trend, an uptrend or downtrend. But breakout and retest work more along with a range market. So whichever way. And of course, even a trend market can range. Maybe get to a point now getting squeezed, for instance, before actually pulling out of that range and so on. So now let's go. So you want to enter the market. First of all, you need to identify is what we say here, direction. Okay, so we need to understand the direction of the market. So when you come, for instance, you come, whichever way you come, you have seen the market started here, for instance. So you don't need to go too far, but for you to understand the direction of the market, if you are a day trader, all right, for you to understand the direction of the market, if you're a day trader, you should be working with higher time frame, like 1 hour, 4 hours, 4 hours, 1 day. Okay, so this is 4 hour type candlestick. So with this is 4 hours. So look at it. I could see that this market was an uptrend. Very simple, right? Now, if it's an uptrend, then what exactly am I supposed to do? Very simple. What I need to do is to look at, okay, this market is trending. How will I know it's an uptrend? This is a high, this is a low, and this is a high, and this is a low, another high. And still, when market have at least minimum of 2 swings high and swing low, it makes sense that the trend is strong enough. This is a swing low, this is a swing high. Now, at the point of swing high or swing low is what we refer to as what? Support and resistance. So these are the things that when we tell you that FELIX trade PARSS strategy, okay, that's price action, resistance, and support. Okay, so here means the market actually had gotten a support here. Another support is here, right? So because after the market broke out, it retested and got bounced from here. Now, before you go to all the complexity of, probably demand zone and then demand zones, support and resistance, other blocks, they are similar thing. It's just that what you spot out for them are different. So demand zone, support and resistance, swings, it's swing that give birth to all of those things. So let's go. You have to look at the market. Where is it going? So market has come back. Market has started moving here. Oh, you are looking at it. How long will it go? It created another low because this is a low, this is a high, this is a new low. So this one become a lower low. This one become a higher high. All right, this one become a high. This one become a higher low. So because this is a low, lower than this, but higher than this. So with that, a break of this, it creates a new high. Present of a new high gives strength to the previous high. Okay. Now another low is created. Present of a new low gives strength. So this low had given strength to this one that invariably the market cannot even come down here. If market come down here, that means the market is not trending up again. Are you getting it now? So for that, you are cautious and you're careful about how the market actually moves. So the worst you can experience that the market could come back to this point, maybe because of demand zone or another block. And if it come down here, chances are there that it could sweep liquidity, meaning that it just come to break, that is fake out and continue. So, but without doubt, we need to enter the market. I've understood the trend. So that's very good. Since I understood the trend, let's say the market has come up to this point. Maybe when you came, the market was here, or when you came, the market was here. So if the market was here, you are waiting for it to pull back. So the moment it has pulled back, okay, was this thing actually up to this? Let's check. So that if this one is a trend on its own, we can know. Because I'm seeing, we may not see it very well, but I'm seeing as if they are in the same, because if they are in the same, that means we're going to have, oh, sorry. If they're in the same, that means we're going to have this as a, as, you understand what I'm trying to say? Okay, do you understand what I'm doing now? Don't worry, you may not understand them totally, but over time, you get to understand them, okay? Oh, sorry. Okay, so let's just leave it at this, right? So now this is what's happening. Yeah, very simple, right? So what we're looking at is that, okay, so let's say this market's actually, this is a high, this is a low, and this is a high, and then another low. Then we have another high. Now, when the market come here, and you came, the market was actually here. So that means you can't do anything. Will you just buy? No. You want to wait and see what's the market going to do next. So what you expect is the market to actually pull back next. Pull back may not necessarily returning back here, but if you return back here and break this, that means you are looking for sell. But a return back here and it didn't break here, you are looking for a buy. So that's when you now go to a lower time frame. For instance, the market that was coming down, look at it, the market that was pulling down with a negative candle, that is a bearish candle, all of a sudden you have this new candle and then it become like bullish candle. So that means you want to go back to a lower time frame, all right? So you don't take the trade at that time frame. You're going to take the trade at the lower time frame. So if I look at this point here, I just hope you can take me back there, but it's still going to, we can go there. So, but just to look at it, that my entry should be now that the market return back here, and I start seeing a bullish candle from there. I will now go down to a lower time frame. So this is 1 hour. Perhaps your lower time frame, internal structure of lower time frame is 15 minutes for 4 hours. So understand this, what we call time synchronization. All right, because it's far off, okay? It's far off. Okay, good and fine. We were able to get it. Now, as we come to lower time frame, can you see something? Now, the internal structure, so get this very cheap. Okay? The internal structure of 4 hours is 15 minutes. So as a day trader, what you're looking for is that the 4 hours is trending up. So get the secret. If the 4 hours is an uptrend and then it has broke a new structure, you want it to pull back. That pull back before it can continue is where you are looking for market to enter from. So, but when you now see that the pullback is happening and the 4 hour candle has start printing a new bullish candle, you come back to 15 minutes. Now, what do you do for 15 minutes? You're looking for, so when a pullback is happening in 15 minutes, let me show you something. When a pullback is when a pullback is happening on 1 hour or 4 hours, this is the pullback. When a pullback is happening on 4 hours, you expect it to be bearish in 15 minutes. Get this to your mind. I'm teaching you advanced thing, but it's good. When a pullback is happening on 4 hours, it's going to be a bearish move or a downtrend in 15 minutes. And that is exactly what you see here. This is a high, this is a low, this is a high, this is a low, right? This is a high, this is a low, this is a high, all right? And you clearly have another low here. So here, what you are looking for is that now the market, this is a high. So this is a downtrend. But all of a sudden, the market now has moved. This is a high. And now this one now is now higher than this. So this market crossing this and then return back here. So this return, having crossed this, is where you are looking for an entry. Remember, it's 4 hours. Now that's why sometimes you are caught in between when you are trading in 15 minutes without knowing that the market is actually an uptrend. Even though this market return back here again, but you'll be safe. Your stop loss will be more minimal. And most time, so people who scalp, they could go back to as low as 5 minutes. Oh, I hope this guy is gonna give us okay. I can't even find it. Oh, here we come. I'd wanted to I'd wanted to show the 5 minute. I do hope it's gonna take me there. So you can see, so now while you are trading, I've just shown you, and this is the most important area of trading. All right. So both 15 minute, 5 minutes will be bearish for a pullback of 4 hours. But of course, normally the pullback of 1 hour should be what you are looking for 15 minutes. So look at it here now. So here will only help me to find an entry early because here this is already this market have changed movement. Then the market move up. This is still our entry anyway. So after you have entered, imagine when you entered here, let's look at it. You are now saying, I'm entering from here, for instance, my stop loss will be below this last low. And so that's how you can know where to find an entry. I'm just showing you one area, and then I'm quickly going to go back because there's something we have identified. All right. So now, first thing you say you have to check, right? You remember? First thing we say you have to check is market direction. That is structure. And that's what I'm showing you. This is market structure. You have seen higher high, higher low, lower high, lower high, and all of that. This is what you're actually first checking. First. Second, you are now looking for area of interest, which in smart money concept, they call it point of interest. So area of interest. So area of interest, which are called possible entry point. And that's exactly what we located here. Why? You are looking at a swing high and a swing low, or a swing low and a swing high in a structure, number one. Number two, you are looking at a key level, maybe daily key level. If you are the type that use demand and supply zone, okay, you are checking for daily key level, weekly key level, monthly key level. All right. What is key level? Point at which market has tested severally. Okay. And those are the things you are checking, and you want to maximize entry point, and you want to maximize taking your trade from those areas. They are very important. Okay. You can see that I've not mentioned any indicator here. I'm only telling you pure market activities and pure price action. All right. So point of interest, area of interest, I've taught this a different topic entirely, how to locate area of interest. So we locate area of interest as key levels, okay, swing low, swing high, all right, timely, timely high and low, like 4 hours high, monthly high, daily high and low and all of that. Then we look at area of that's a Fibonacci level, or these are area of interest. And so you want to look at it. Then you now look at smart money concept area of interest, which has to do with order block, all right, fair value gaps, or what they call imbalance or inefficiency in the market. These are area. But don't let us go too much there. You're just looking at simple market entry with this kind of, you see what I've just done? So I'm moving to higher time frame, none of that. Then you have checked it, it's fine. Then the next thing you want to check is the fundamental influence. Now, fundamental influence can be checked on Forex Factory if you are trading Forex, and to check, are there news? And I want to tell you as a beginner, don't trade too many instruments that have different fundamentals. For instance, you are trading Euro Chef, Euro Card, and USD JPY. You are trading USD, so many, so that combine too many countries' economy. You're going to trade more in currencies that are major, and major currencies are mostly currencies that are paired with US dollar. So they have low spread depending on your broker anyway. So, but this help you to reduce stress of moving here and there, checking too many conferences before you take your decisions and all of that. You get it? So please, these are very important and vital stuff. So you can now see now that because I came down, I haven't gone to my 4-hour time frame. This is what's still called top-down analysis. I was able to find a proper entry as early as possible. Okay, if you look at it now, this is going to go to about 1:4 risk reward. And now, so if we have done that, so we have getting the fundamentals. If there's going to be a major news that's going to influence the market, you be careful. Probably you may not want to enter the market, all right, or you enter with a very small kind of portion. The next is invalidation, right? So negative exit, that is stop loss. So you are now saying this market may not play out as you expected if you decide to break this low. As at the time you are finding an entry, you say, if this market decides to break this, that means it's not going to give exactly what I envisage. For that, you put your stop loss. That if the market return back here, just take me out. I will find another entry thereafter. That's exactly what we're doing. All right. And that's what we call invalidation. That's where you put your stop loss. But of course, there are more things about stop loss. We talk about trading plan. If you do not have trading plan, you may not have effective stop loss. Because trading plan has to do with position sizing. How much are you trading with? And how much can you afford to lose per entry? For instance, I've done training on this, so you can go to my YouTube channel to check that. I did it that when you are, let's say you are trading with a prop firm, and you can always calculate your position sizing on babypips.com. So if you go to babypips.com, yeah, I know you are a beginner. I'm just giving you this so that it's going to help you. So you go to position sizing. Of course, when you go there, so let's say you are trading with, let's say you are trading with, let's say you are trading with $500, or you are trading with $100. Now, if you are trading with $100, you will expose to more risk because you want to trade with maybe 5 to 10% of your account. So if you are trading with much money, that's when you trade is 0.5 to 1%. You know, they only tell you make sure you only trade with 1% of your account. 1% of $100 is $1. So how much are you going to make? Okay, so let's say you are trading with 5% of your account. So let's go. So 5% of your account per time. So per entry is 5% you want to trade. So now, what should be your lot size? So if you check that stop loss, we're checking, the stop loss we're checking was average of 14, 15. So let's say 15 pips. So let's calculate for you to know how many lot size you are going to use. All right, so you're going to use 0.03. So when you use 0.03, so you are losing $5. And that's exactly what you're doing. Look at it. 0.03 is what you are going to use to enter this trade if you are taking one position, right? So look at it, because if you look at it now, our pips is 11.8, so average of that. So you are now saying you are using 0.3, so that if the market invalidated, you lose $5. All right. So one risk ratio, two risk reward should be minimum. If you go your way, that means you are making times 2 of what you actually agreed to sneak into the market. So meaning you're going to be making 20 something pips, which is about $10. And it closes, you are fine. If you have more money, that's where you can do DCA, more positions, and then to maximize the trade. Or let's say if you know you want to risk like 10% of your account. So 10% of your account will be $10, and you can split into two because it's going to give you 0.06 or 0.07, something like that for the trade, right? So that's exactly what you want to do. All right. So this is entry and Now, invalidation. So invalidation is stop loss, that's negative exit. Then profit target is positive exit. So you must put it and then you allow it to be. Does that make sense? Now, next thing you need to know is just about trade management. So what's trade management? Trade management is very simple. Trade management says you have entered the market. That's after entering the market now. So if you have intention, of course, if you don't have trading plan, you may not be able to effectively manage what I'm saying there. So DCA and stacking. DCA means, oh, the market has moved your direction and it's still going well. Then you want to add more position if you are following the trade, okay? Right? You want to add more positions, and that's one of the things, okay? That's what I mean by stacking. So the market has broken a new structure, pull back, you add more positions depending on your capital and all of that. That's what I mean by DCA and stacking. Then BE, break even. Maybe you are entered two positions, one have hit take profit. Now, most people will tell you that once the trade have gone to 1 ratio, 1 risk reward, take your stop loss from where it was and move it to where you entered the market from. Meaning you are broken even. Even if the market go against you, you are not going to lose money. But I always do my own. My first take profit hit, I will move the second one to break even. And that's what it means. The next is trailing. So trailing is still the same thing like you are breaking even. But in this case, market continue to move. You keep adjusting your stop loss. You keep adjusting your stop loss to follow the market. And that's exactly what we are teaching here. So ladies and gentlemen, I'm sure if you pay much attention, you see that trading is actually not difficult, but we are the one that complicate issues for ourselves. Now, this is entering the market at a pullback and continuation. So what about reversal? Okay, good, fine. Now look at it now. This market now got up here. You can see the market continue to trend and trend and trend. This is on 4-hour time frame. So you now expect that the market was going to do something. So let's take off all of this. Let's take off all of this, okay? So what you expected was that the market was going to continue, right? This is a low, this is a high, and this is a low, this is a high. So most time when you are now trading, as you know, that's why I always encourage people, don't trade too many instruments. Now, you have marked this point as a swing high. So can you see now? Now where the market got here. So, you know, trading is mechanical. Now you have marked this as a swing high. And then here is a swing low. Look at this point, this guy here. Okay? Make a lot of sense, right? Good. Now, so this is a recent swing low and this is a recent swing high. Now, the market was moving and you now expect that, okay, if the market pull back, it probably will return back or anywhere there. But unfortunately, see what happened. The market pull back and stop here. This is a low. Okay, don't get carried away. This is a low. So this low has indicated that, okay, the market has pulled back, which I know definitely you probably will have entered a trade here. All right. Do you know why? Okay, now let's quickly go. I know why you will have entered a trade there. So let's just mark this point to an extent. Because you are still expecting that the market continue uptrend. So let's go to 15 minutes. All right. So let's go to 15 minutes. All right. So remember that this was the, you remember? Remember that this was the high. So on 15 minutes, it has created a downtrend because this become a high, a low, a high, a low, a high, a low, a high, a low, a high, a low. Now coming down here, so we have a high here. Now the market has created a new low, a new high. So this is a high, this is a low. So because this has happened, do you get it now? Because this has happened, very simple, okay? Just understand that 4 hours internal structure is 15 minutes. So if you want to go for 5 minutes, you get it fine. So what will happen is this. Because the market is already moving down, because this is a high, this is a low, this is a high. So we have 1, 2 high, then we have 1, 2 low. So breaking, not getting to this point now, you want to be selling because this is like a pullback of this low. And some people actually say, but I don't sell because I don't want to go against the trend. But if you have the energy, you could do that, right? So at the end of the day, the market had come down here. So how long? It now got out to this point. It creates a new low. Now, this is a new high and another low. So you can see now that this low, so this high had taken out both this high and this high. So very soon, that means the market, you're actually entering the market wherever here. Okay, that means you are entering the market here. So entering the market here is this. Now, when you are entering the market here, probably here, your stop loss is below that low that was created. Remember? Okay. Now your take profit is 1:2 risk reward, first minimum, right? Another person will target this high. That is external liquidity, all right? So, but your 1:2 risk reward as a culture has been filled. And the other one you have, you are saying, okay, when the market get up and all of that. So the market continue to move. It actually return back to this and create maybe double bottom, something like that. Now the market move up and give you your profit. Fantastic. But see what happened. So let's return back to the 4 hours. So returning back to the 4 hours, what has happened is simple. Okay. Oh, what's going on, ladies and gentlemen? AUD card. Okay. Then it got squeezed out. AUD card. So you can see how trading is very simple, but we complicate it. Now, so you can see in 4 hours, the market actually give you what you wanted. Now, this is something happened. Something happened here. You see something that happened? Remember, this is the immediate swing low and immediate swing high. Now, the market got up here. Instead to get here and break, it failed. Wow. Okay. Is that what you want to do? No problem. That means this one become a new low to this high. And this one become a new high lower to this. So this one become a lower high, and this one become a higher high. This one become a low or lower low. So what now happen? You are looking for this market that come to this point to break this. He now got here and broke this. So fantastic. See what you are now looking for. Oh, if this has happened, that means there is what we call market structure shift. That it has just changed direction. This is your reversal you're actually looking for. This is your reversal. So here we have a low, a new low, then a new low here. So this one become the low that has been secured. This one become a low that is still exposed or porous to attack. So here, this is a high. All you are waiting for is for this low to create a new high. And that's your area of interest. What could happen for this? This now, when it moves up here, I always love an aggressive move. So if you are, oh, I don't want to go into smart money concept, but most money concept, smart money concept, what they want, an area of interest they want is this. They want an imbalance. Okay? They want an imbalance. And from the new order block, which is this. Okay, I'm not going to be explaining the concept of what order blocks and all of that. But so this is the last bullish before the aggressive bearish candle came. So now chances are there that you probably will have short from anyone here, no problem. But chances are there that you're going to be stopped out. So what they are looking for is that the market should pull back to this point and you are looking for an entry. All right? Because this has happened and all of that. So let's go back to 15 minutes now. So let's go back to 15 minutes. Good. Can you see what happened? So you can see what happened, right? So what happened was very simple. So imagine if you don't check it at the higher time frame, you probably will not understand that. Okay. So the market returned back, squeeze, and all of that. Now actually had done as if it has come down here, but this low is still there. Finally, we saw it tap into this. And so the chances that are there, let's take this other block out. Now, this is why when I'm not entering, so when you are looking at the market to return back here, of course, even on your 15 minutes, you may miss this sniper entry, but some of us will not miss it. How do we not miss it? We now do what they call, a kind of premium and discount. So we enter at the 50%, that's middle range of the market, which happened. So for me, I enter in three position, 1, 2, 3. This one will not be triggered. All right. But so nevertheless, don't mind all of those higher concepts. Now, you that don't understand this, you have only waited for market to actually start pulling back. That means you want to actually enter from here. When you enter and put your stop loss little above, you're going to be stopped out. The market move. But look at this. After this is the best entry. Now, for you that don't even understand what was going on, it's very possible that when the market has squeezed all what you want to do, you are looking for an entry here. So chances are there that you are stopped out. You know, you can't win all trade. And then if the trade had been triggered here, let's say here, and your stop loss is actually above the candle that created that imbalance in the market, perhaps. So now 1:2 risk reward will be achieved very fast. Then assuming you are going down to this low here. So this low here will be this. That will be 1:4 risk reward. Are you following now? Now the market continue. So at the pullback, so the market continue, and then this is a new break of structure, another pullback. So let's go back to our 4 hours. Okay, let's go progressively so that it won't squeeze us out. So when you are trading like this, you are going to be patient. You are going to wait for confirmation, and then you are going to be more profitable. Even when you have a stop loss, it won't be too painful because it will not be too obvious or bogus. So you can see here, the market has created. Now, is this time now, right? This is a high, this is a low, this is a low, this is a high, all right? Now, it now broke the external structure, which is the previous low. This is the place that it now broke external structure, which ordinarily, if you are waiting for 4 hours confirmation, you wouldn't have entered. You probably will be entering. Look at where you'll be entering from. You'll be entering from here because it has now broken this. You'll be entering from here, and which is still okay anyway. But a sniper entry trader is already on 1:5 risk reward, making over 50 something pips, and then trailing the trade down to where it is now, you will be on 1:13 risk reward. And I can tell you this trade will still continue after market open. It will pull back normally, and then another sell happening, maybe probably to this point or to this other block here. Are you following now? So it will now stick to this other block. So when you are telling people 1:23 risk reward, it looks impossible. How do you do that? So that's about 214 pips just to agree to lose 9 pips if eventually the market play out. So, ladies and gentlemen, as a beginner, what I've just shown to you is very simple. Learn to understand market direction first and understand, of course, 3 places to enter: reversal, reversal point, all right, pullback and continuation, or breakout or retest, and that's how you actually trade. So you want to learn more about trading, you chat up with us, look at the comment section, pick some of those things that are there, register on Capital Extend for Forex, Deriv, and the World Trade for Synthetics, and on crypto, Bybit link is there down there. You want to chat up with me on the number +234 9047044998 +234 9047044998. That's my number. You can WhatsApp me and then we can talk. You can, once you register, fund your account with minimum $100. You have access to our signals on Telegram. You want to learn more, we put you through on how to maximize the global financial market. This space is very fantastic only if you can pay simple attentions to make money, right? So it is very, very fantastic. Ladies and gentlemen, you're welcome. So don't play with it. This is just simple market entry. You can pay attention, discipline yourself, or open. In fact, I'll tell somebody, instead of opening demo account, register on Atlas. I will drop Atlas link, pay $10 to buy an account and practice. If you lose it, you lose $10. So you have nothing to lose so much. But if you only trade demo, I'm sorry, you will not even achieve anything because it's not the same. You understand? That's the reason for that. Okay. Although Atlas, you trade on this platform called okay. So maintenance is ongoing. So you trade on this platform called Trade Locker. Okay. So that's the only place. So that's the place you can trade if you are using Atlas. So ladies and gentlemen, you can see how simple it is to maximize and trade in the financial market. Just simple thing, just simple things. So take those steps, snap them, practice again and again, and you are going to enjoy yourself. Now, the next episode, I'm going to show you now how to take trade on MT5. Does that make sense? I'm going to teach you on how to take trade on MT5. Don't go away. MT5, we're going to show you how to trade on MT5. That will be episode 2. Thank you and do have a nice time. Bye and love you, everybody.